business or are you running a business? Valuation is the ultimate KPI.
Hey there, welcome to another episode of the Modern Financial Advisor podcast, brought to you by Truelytics, the premier transition management and business optimization platform for the wealth management and insurance industries. My name is Mike Langford, and I'm the host of the Modern Financial Advisor podcast. And this week, I'm joined by Justin Paterno, the Chief Operating Officer of StockTwits and a newly launched brokerage platform, which we'll chat a little bit about, maybe a lot of bit about, in depth on this podcast. I'm really excited to have Justin on the show. He and I have known each other for quite a few years now. And I first met Justin when StockTwits was very much in its infancy. And it's really exciting to see how the company and Justin individually have grown over the years. It's really exciting to see him grow into the leader that he is today, to see StockTwits grow into the global presence that it is today, and to see them expanding into brokerage, which has been a plan for many years, as you'll hear Justin and I talk about in this episode. But looking back at where I first met the team at StockTwits, it blows my mind, right? And it also serves as a lesson, I think, for all of us that don't ever judge the potential of an idea or of a business from where you see it first. Lots of things grow quickly and scale much bigger than you could ever imagine. Now, when I first met the StockTwits team, they were based in Coronado, California. Now, if you're not familiar with Coronado, it's a very beautiful beach town. It's called a city technically, but you would never think of it as a city. Anyways, it's a beach town right across the bay from San Diego, right? It's gorgeous. It's got the Del Coronado, which is just an old Victorian-style hotel, just absolutely beautiful. It's the last place in the world that you're going to expect to see a startup that's dealing with building a community for traders and investors, right? But lo and behold, I was at a speaking engagement back in 2011 in Coronado. Howard Lindzon, one of the founders of StockTwits, pings me and said, "Hey, you're here at Coronado, let's get together." And so the next morning I get to meet with Howard. We have breakfast and he's like, "Oh, you got to come over and meet the team." I'm like, "You're based here? This just seems odd." I figured it was, New York City or Silicon Valley or whatever. And he's like, no, we're based here. So we walk across the street and we get to this little, almost look like a motel, frankly. But it's a 2-story walk up. We go up there and there's like 4 rooms in this place. And that was the global headquarters for StockTwits at the time. This, 4-room little office there. And I got to meet everybody and take pictures and so forth. It was just really cool. But now when I look at it today, right, they're headquartered in New York. People all around the world are using the platform. They're expanding the platform dramatically. They have their Stocktoberfest events every year, which hundreds and hundreds of people come to from all over the industry and, again, all over the globe. So really, really exciting. So anyway, the reason why I wanted to have Justin on the show today, or what kind of spurred me to reach out to Justin and say, "Hey, come be on the show with me and talk about this," is they just launched TradeApp, and it's a brokerage platform. And like basically now most brokerage platforms, they charge 0 commissions for trading. And that started a few years back with Robinhood. And it's basically now permeated the entire industry to the point of, like, if your brokerage firm is charging a commission for equity trades, your clients are going to start asking, why am I paying a trading commission here? Because nobody else is charging a commission. And it really signals that the industry is continuing to change in the way that they deal with their clients and the way that they charge their clients. And it's really, really exciting, particularly exciting as it relates to StockTwits and the community they have and the reduced amount of friction it has for people that are on that platform to trade using TradeApp. So really exciting stuff. You can check out StockTwits at stocktwits.com or the App Store. You can also find TradeApp there. TradeApp.me is their website, or you can, again, go to the App Store for find the TradeApp there. As for the show, make sure you do like and subscribe to the show if you haven't done so already. It should have changed the name to Modern Financial Advisor from Valuations on every platform you find it. So make it nice and easy for you to find it. Make sure you give us a like and a share on social as well. And if you have questions for me always send them in, Mike at Truelytics, or you can hit me up with the socials. I'm at Mike Langford everywhere. And if you have questions for Justin, you can ping him. He's at Zero Beta everywhere across the social universe as well. And I'm sure he'd love to dig into some of the questions here that we cover with you. Okay. Well, enough of me blabbering on the intro. Let's get to it with Justin Paterno of StockTwits. Well, hey, Justin, thank you very much for joining me on the show. I'm really excited to have you. It's immediately when I saw that StockTwits launched Trade App, I'm like, oh crap, I got to get Justin on the show, because this is going to be a topic that's not only relevant for him, but relevant for our audience. And I can think of nobody better to kind of share the insights about what's happening just in the market in general, right? So, to kind of give the world a little context, StockTwits recently launched Trade App, a zero commission brokerage platform. And, we've seen that move across the industry recently, and I figured, like, let's get on a pod together and kind of shoot the breeze about it. So I'm particularly interested in your perspective of given like the insights that you've seen with StockTwits in the trading space and this move to zero, right? Because it's been happening at other brokers here and there, and now it seems like it's a standard. So I'm just kind of interested to kind of hear what you think.
Yeah, no, thanks for having me on, Mike. It's great to speak with you. This was a move that was inevitable. When Robinhood came out, and what was it, like 4 years ago? I think that was a shock to the system. A lot of people said, how are they going to make any money? This isn't a business model that makes sense. And even when we launched Trade App a few weeks ago, I was having conversations. We were at our Stocktoberfest event, and a few people said, what's the business model there? But I think as this, of all this move to zero played out over the same time frame, it's proved out that what's the business model of charging for commissions? It's similar, and I keep using the metaphor as text messages. So, back in the day when we had phones, we used to pay for text, right? Or you would have a limited number of texts for a certain rate, and then you would have an overage charge, similar to commissions. And text messages and trades, each marginal cost of these is basically zero. You have to set up the infrastructure, and as cloud computing costs go down, the trade doesn't cost anyone really any money. Trading costs globally the entire system and companies on it some money, but this move towards unlimited is not just in investing, it's in music, and it's in like movies and TV with Netflix and Spotify, and people want to reduce the friction. So it makes complete sense. I think it's really interesting for this space because when you look at the commission model and how that evolved over time, you have companies that rightfully move their product and shift their product towards their business model, which was charging for commissions. And while they make money doing a lot of other things, and I think that was why they were able to make that shift, the product itself has always been built in a way that, it has to serve the person who makes many, many trades. So that's why you see the commercials with the guy on the screen with 20 monitors and like all these screens, because that was how, that person is their best customer. It's probably their most successful customer. But most people, when they sign up for a brokerage account, don't, that's not necessarily how they're going about it. And so the whole industry has been limited by the business model itself. So zero, I think, when you as a brokerage, I think it's the day one of a new age of active where we're starting to align our interests with the customer, and not just our best customer that trades the most and has most screens, but every customer that wants to trade active and invest active.
Well, you can go back really far, right? For you and I, we remember the day, the world before the internet, right? The early 90s, there were these things called full service brokers, which charged a hefty commission, sometimes upwards of 5% of the trade to make a trade. And then all of a sudden these online discount brokerages happen, right? During the E-Trades burst on the scene, and when the web came about, and then Fidelity followed suit and Schwab followed suit and so forth. And suddenly commissions were much, much lower, and those full service brokers just kind of vanished in terms of their general format, and they had to change their business model fairly dramatically. But one of the big positives was that the more people came and more assets, as a result, came into the system, right?
Yeah. I mean, when you think about what happened there, and it's actually great that you even asked that question, because a lot of that has to do with the thesis behind TradeApp and why we were moving in this direction, is that shift from the full service, the broker relationship, to the E-Trades and the discount online broker that happened with the advent of the internet. It left something behind, right? That relationship. Your broker would call you and talk to you about what was going on in the market. You would call them and ask them questions. And I think the whole industry doesn't understand that social component was important. A lot of the advisory space now has shifted into that. And for a little bit of time, the wirehouses were sitting in this, your broker is calling you with, a trade idea. I think, what's changed around the fiduciary responsibility and all that kind of stuff, and just the industry as a whole, has shifted that more into an advisory relationship. But, for people that just wanted to trade, they had someone to talk to. They had someone who was looking out for them. They were curating interesting, stocks and research and things like that. So with StockTwits, now that we're, now 20 years in from the discount broker and even getting more and more discount, we've built this large social network of over 2 million people. Now we have this easy access to trading, but people still yearn for that connection. That's why our network has gotten so big. So combining both of those, and that's what we're doing with TradeApp, with TradeCasting, allows people to have that connection to other people that that investors used to have. And we believe that's going to create a really more interesting, dynamic, active investing experience, and the one the customer really wants, and that can make the market much, much bigger than it already is.
I love that. I love that notion of the interactivity and the social nature of it, because, I think people often forget that, most investing is, it doesn't come up in a vacuum, right? Most people aren't sitting there poring over prospectuses and reading annual reports and doing some sort of primary analysis. They're they're thinking about, they see something, they see a company, or they see a general trend, and they want to invest for the future, or invest for, even if they're a trader, like a more active trader, they want to take advantage of some things they're seeing. But it doesn't mean they don't want to talk to somebody about it, or they don't want to interact with somebody or learn from other people. And I think there's a lot of value in that. Let's jump into that. We're going to jump, to, I had this is a bullet point for a little further on, but I love to explore the value of StockTwits for financial advisors and wealth managers with you, because, I've been, for the last decade or so, an evangelist for the concept of social, for financial advisors, for them to interact with their prospects, their clients, or referral partners, to get out there and, this is where your customer base is. You should be using social as well, to better connect with them. But I think there's another use case that is really specifically lives on StockTwits, which is gleaning value and better investor insight from other investors that you can then take and translate to your clients and so forth. But I'd love to get a feel from you of like what you see actually happening on the platform with advisors and wealth managers.
Yeah. So I think you hit the nail on the head with two main use cases. I think one, there's the communication angle or even the brand building angle that people use StockTwits and other social platforms for. And I think a lot of advisors, and I used to be a advisor at Citi years and years and years ago. And that's really kind of what brought me to StockTwits. Was I saw these new social platforms starting, and I saw the value for it in terms of acquiring customers and just how the landscape would change. But But for acquiring new customers, I think a lot of advisors will look at it and say, okay, or the old adage to be let me just be very, on the nose and, recruit this person or, try to gather leads in a very straightforward way. But you're at a place where people want to talk about finance and, to even start an advising relationship, you have to be both interested in investing and, what investing can do for you. And then you also have to say, this is someone I want to talk to, right? Even if you're talking about active concepts or the markets in general, an advisor, someone's like, hey, this guy, he's seeing, he understands what's going on. He understands investors. So a lot of good people like Josh Brown, he built his a brand on StockTwits and Twitter. And these platforms, and it's not like he's giving advice. He's relating and connecting with people. So that's one use case. From a research standpoint, there's like a 30,000 foot view, and then on the ground view. So the 30,000 foot view is StockTwits is really great for understanding the pulse, where the average investor is and where they're feeling right now. So sentiment. And just general tone and mood. I think a lot of people don't. A lot of people do understand that. I think some people come and they look at the on the ground view and they're like, well, this person is wrong. But when you look collectively, you understand that no one is wrong in how they're feeling, right? The temperature of an investor. It's just pure emotion, right? So you could see where your client base what they may be feeling. So you can anticipate a flurry of calls potentially, or you can anticipate where your prospects are. Are they feeling overly exuberant? Are they feeling fearful? Are they going to start asking you about, Bitcoin or tech investing or whatever? You understand the general tenor of the market. And I think that's super, super important for advisors, which is just, understanding the temperature of your customer base and the pool you're fishing in, or the pond you're fishing in.
That's fantastic. I love that, the notion of the sentiment concept, right? And how you can learn, an advisor can learn a lot from that, of really seeing other active investors in real time, sharing their sentiment, and using that to kind of, like you said, anticipate questions that your clients may have, but also kind of construct a narrative, I think. So one of the things that I think advisors bring to their clients as a value prop is helping them understand what's going on in the world, right? Sometimes it's having a good bedside manner and removing a little bit of anxiety that a client may have, that like, oh, geez, the market's down 10%. What do I do? Should I pull all my money out? The classic irrational behavior, right? Selling low and buying high type of concept. But being able to go in and see, here's how a lot of other people are thinking about things, and translating that out of in normal speak, right? A lot of times advisors will take what their broker dealer throws them, and it's this very economic analysis from somebody who's, the chief economist of the firm. And that doesn't always translate well to real human beings, right? Who don't have finance degrees. So I think that's a really astute point, that something in terms of the value prop somebody can get out of participating at StockTwits as an advisor.
No, absolutely. And I think, and now you're kind of getting at like the, on the ground level, is just to be informed. You can pick up interesting facts, see interesting charts. Some of it can inform how, as an advisor, you make advisory decisions, whether that be allocation, products, services, how you build your business. But it's a very, at the core level, it's just, if I'm someone advising someone on their movie recommendations, I want someone who's, seen a lot of movies, understands what people are talking about on the movies, like has interesting movie, recommendations. Like, they're going to tell me how to invest my time in watching movies. So an advisor, I think, most advisors, you want to say, okay, yes. And I think the general way in which the market's working right now, it's about allocation. So that, talking about individual stocks is something that you don't think you need to do, but no one wants to talk about indices with you either. They want to talk about like the move from 6% in large cap to like large cap value to 10% in large cap value. It doesn't mean anything. So I think you still need to be conversant in what's happening in the markets, but also, understanding of the fact that, and also have that discipline to say, okay, this is still the strategy we're going with your clients, but it's not, people are not just looking for an allocation with an advisor. They're looking for advice. They're looking for a friend. They're looking for a relationship. They're looking for a connection to investing, and they want to have a seat at that table. And for better or worse, and I'm personally a big proponent that active is still an important piece of the overall investing world and universe. Active's just more interesting. And I think people want to be watching that soap opera unfold every day, because it does run, it is one piece that sits, it's one of many little pieces that sit under the allocation you own. And it does affect, everything. And it's hard to remove yourself from that. So you might as well be conversant in it.
That's a great point. Because, I think a great deal of clients are going to come into that advisor's office or get on the phone with their advisor, and they're going to have some areas of interest. And now they may not feel comfortable bringing them up, but if you can create that type of conversational nature with them, like, here's some things, what are some of the companies you're interested in, or what are some of the trends you're interested in, and what are you seeing, or what questions do you have? And we can have that type of conversation, because an informed client, right, is a better client, right? That they're going to be more actively engaged with you and relying on you and your advice and your insights, and they'll bring you ideas, and then you can make sure that you have a much more vibrant relationship with them going forward, because instead of it just being like, hey, here's your asset allocation that is all these, index funds. It's great, but here's how it performed, and I'll talk to you in a few months, right? Instead, it's like, hey, let's have an actual conversation about what's going on in the world, and let's talk about your goals and things that are happening in your life as well.
Absolutely. And I think, so much of the investing space is kind of defined by how someone makes money in it, and potentially also just the regulations. But that's not how the customer thinks about it. That's not how your client thinks about it. It's just investing, right? And I think it's somewhat being lost in the space these days because of different marketing angles to reach them. And with this move to zero, and I think as the market starts to make this new shift, both on the zero side, on the robo side, on the advisory side, away from the wirehouses to the RA model, it's going to be investing. Your customer wants to invest. And if we can't convince people why they need to invest, then we're all going to be losing, right? The market's never going to get any bigger. People are going to either, save money. They're going to just not really focus on it, or they're just going to take that money that they could be investing and get other utility out of it, like spending money on things they don't need, right? So, I think where, when it comes down to it, is investing is important. We're all in the investing industry, whether we're a brokerage that's, self-directed, whether we are an advisor that is fully managed, and you're like, or like a PM, or whether you're a mutual fund, hedge fund manager, whatever. It's convincing people, getting them excited to invest, and understanding that the more they invest now, the better off they're going to be later. And obviously, depending on where you are, but I think everywhere, kind of having the customers, being a steward for your customers' assets is important, no matter what. And I think with active, at least, it's exciting. It is what is fun for people. It is something they can check every morning, and it keeps them engaged in that process. And the hard part about that is not necessarily like, them chasing this stock or that stock may not be what the advisor wants them to do, but it's where you got to meet someone where they're at. And I think, robo advising, like robo and all that kind of stuff, it's not exciting. So I think the big challenge for the whole industry is, how can we make investing, how can we take that and turn it into more holistic, and forget about all this, passive versus active. There's investing, and then there's helping people do that better, right? And that's the advisory piece. And I think the more the market starts to evolve into that, and it's not like passive versus active, and RIA versus wirehouse, I think it's going to be better for the investor in the market as you get a lot bigger.
Great point. You brought it back to the move to zero, and you mentioned something I think is really important. This oftentimes the industry gets very concerned about these pricing changes, right? So, at one point in time, we moved out of commission brokerage and we moved into, wrap fees, right? And so fee only or fee based type of advisory stuff. Now we're at zero. And then, of course, you see, the robo advisory offerings where some of them present themselves as zero fee, right? Recently, the president of Commonwealth, which is a big broker dealer there, he got up on stage and said to his advisors, like, hey, listen, you need to talk to your clients about this type of stuff. Like, you need to be the first one that's having that type of conversation. I know that TradeApp is more towards, self-directed investors and so forth, but there are bound to be some impacts felt by advisors, right? In terms of, the zero price point. How would you suggest that somebody have that conversation with their clients? So what would you say they say to them? Like, hey, listen, I know you're seeing zero here, but here's how we should approach this.
Yeah, I think as an advisor, zero should not be as an advisor who is, a real person with a real relationship. I don't think zero really, you should be worried at all about zero, in a sense that it is probably going to make your life better in interesting ways down the road, because I think now, because you're going to be clearing through someone, or you're going to be, people are going to potentially, you could be a service layer on top of a zero commission platform, right? And you may have lead gen from active start to come in. That's interesting. I think zero commission for the RIA model are going to be like peanut butter and jelly eventually. They're going to go together very well. I think where zero is potentially very threatening to is robo advisory.
Right.
Because at the end of the day, if what you're selling, and this is why I actually moved into tech from finances, at that time I was at Citi, and it was kind of during the shift from, more PM type portfolios, or even the old like brokerage, model where, you were kind of pitching product and things like that, to, the wrap fee on an allocation that came down from the top. Right. So, basically you were just, going out and finding leads, you were printing out the firm's allocation, and then you were presenting it to them. So, I was sitting there, I was like, what the hell is my value in all of this, except for getting the customer? And in both cases, I was like, social is going to help, and all these social platforms are going to be new acquisition channels. And then, it's just algorithm, or just like computer allocation. This is all going to get replaced, if this is all we're doing. And a lot of that has happened with the robo advisors. So now I look at the robos and I say, how this could all be accomplished with an ETF, or maybe a family of ETFs, right? You take what your risk profile is, or you brand it towards your age, right? You have like the Vanguard age 36, or your birth year, and they did those with mutual funds back in the day anyway. Mm-hmm. You're probably just as good, right? It has a really low expense ratio. You could buy it in a in a zero commission account, and then it's just, maybe the account, they offer a service to help you not touch it in some way, like a lockbox, or you give the key to someone, whatever that might be. No, I'm serious. So like,
yeah, I like it. I always think of Al Gore when I hear lockbox.
Yeah. And then, if you're paying like even like, 20 bips to a robo over time, that's going to be a lot of money as your money grows, versus plus the expense ratio on the underlying ETFs. That I think the future, if it's going to keep going cheaper, is towards the brokerages in an ETF than it is towards robo advisory. So then as an advisor, you have to think about, that relationship, right? And I think most good advisors already are. And I think that's great. I think it's going to be fine for them. I think it's going to eliminate some of the competition, which is like, why do I need you when I have Betterment, and start to take some of those assets and make them more available.
Yeah, it's interesting. We've seen a lot of firms are starting to offer a bit of a hybrid model, right? So for clients who come in and they will be potentially really good clients in the future for the advisory firm, but they don't yet have the assets to qualify for some of their higher hands-on white glove type service offerings. They can offer some sort of robo offering, right? To make sure that they can give them some service. It allows them to scale with some of these smaller growing clients. It might be a young professional who's coming up in their job, and that 10 years from now, this person's going to have plenty of money and be in their peak earning years. So you want to capture them while they're young. And so that's one of the things we've started to see is that, firms are starting to move that way. So really quick, back to, you mentioned something about, your experience, your early experience as an advisor. And it was one of the things I wanted to chat with you about, because you have a really, I'm glad you teed that up. You have a really great path along the journey to StockTwits, right? You had a lot of different experiences and so forth, and it's not like you're somebody who's kind of talking without ever having been in the industry. So I wonder if you might be willing to kind of share about your journey to the company, what got you to StockTwits, but also maybe share some of the insights you've learned over the years as you're now, one of the executive leaders of the firm.
Yeah. So my journey, after school, and I had interned at that time, it was Smith Barney, an intern for, basically like a group of, FAs, and they ran like their own PM book. I forget what the name of it was back then, or internal name. But we actually had, full discretion over the assets. So it was like, running a little bit of a mutual fund within, the advisor framework, right? And it was an interesting, like, covered call book. So we basically had a buy right portfolio of about 40 stocks, and we would write covered calls on top of them to generate income. And we had different, we had a core portfolio, and then we had customers with different needs. Some customers wanted different tax efficient strategies. Some customers wanted different risk profiles. We had actually like a weird like leap right book where you would buy like a deep in the money leap, and you write a call up against it. So it's kind of like it's really a spread. But it was just an interesting, unique portfolio product that we offered. And I was really into options and finance in school. I was a math person, so options interested me because of the mathematics behind it. It's just kind of a market junkie overall. So I was there for like 3 years. At the time, I started blogging anonymously because it was just the advent of web media 2.0.
Right.
And I think you remember all the people on the blogosphere back then, like Tadas at Abnormal Returns, and all these interesting blogs that were really, calculated risk. And it was 2007. So all the blogs were talking about how the markets were going. There was going to be this great crash, or not all of them, but there was this underlying conversation happening about it. Got really interested in that, kind of started reading up on it, and was like, yeah. So I started to be, and I could see some of the stuff just being at a big bank, what was going on too. I just had a little bit of lens into what it was like on the lending side and all that kind of stuff. And, Citi obviously did not do so well during that period of time. So I started blogging just about my thoughts on the market, met all these people that were, met all these people that were, in this community. So it was like Howard, who's the founder of StockTwits. He had a blog and started networking with them. And then I think Tadas found my blog, and then, it got like mildly successful. It was getting linked to on like the FT link roll. And I'm like, it's like, oh, this is kind of funny. These people at my office who are probably reading this, or it's me and they don't even know it. And I was just like, but at the same time, I was going into work every day and it was like, oh, you have to cold call these people, right, to get accounts. And I'm like, I'm reaching so many people today just through this blog. They don't even know it's me and I don't have a service to offer them. I'm just getting my thoughts out there in the world. And I could turn that into a brand building opportunity. And now Twitter had just come out and there was so much potential in using these tools, but you're never going to do that at the big wirehouses. And at the same time, they wanted to move to a model that was like, gather as many assets as you want, like just like the online brokers, they're going to shift their business model, their process to, fit the fact that someone trades a lot and maybe a lot of other people are not going to be successful. The wirehouses were like, we'll have a program, we'll bring in people, we'll get their family's assets. If they're wealthy, then maybe some of their friends' assets. If they're successful, great. If they're not, now those assets are sticky, right? And it was just kind of silly. And there's no way for you to gather assets without leveraging these new tools, or at least for me at 23 years old, I didn't really know anyone who had money. And I wasn't really so sure about what I wanted to do. I was going to go put all my parents' money into something that now I might be gone from, in a few years. So just got really interested in tech, social media. I was like, I just need to change. So I left. I went to a company called Unu. We built nothing to do with the advisory space, but it was a really interesting company. But that company, it was 2008. That company went under. StockTwits had just come out, and I had been following Howard, and I'd been following StockTwits. It just reminded me of a lot of the ideas that I had when I was at Citi in terms of how people can connect with investors, or how investors connect with each other, as well as advisors could potentially connect with investors. So I was like, oh, this is perfect. So I emailed Phil Perlman at the time, who was looking for someone to work on the community side. And at that time I was an intern. At this point I was like 26. And I was just like, whatever, I'll work as an intern. This is going to be wildly successful. So I think StockTwits, we raised our either seed or A round at that time, came on full time, worked in community, worked in product. And now as COO, I still focus mostly on product. And now we have Phil back running community, but it's been a wild ride from that point of thinking like, hey, this social media could be very disruptive for investing, and then actually being able to go do it. And now with TradeApp, it's kind of funny because it's going full circle. And I was actually at dinner last night, and I was like telling this similar story. And I was like, I never thought I would be back at a brokerage or in this world. And now here we are, in this whole different lens. So it's kind of interesting.
I'm truly amazed at you mentioned it, and I think it's kind of like the tenor of your story is, seeing something evolve and knowing it's going to be, but and then just it takes longer than you would hope it happen, right? So you talked about your blogging and realizing that this is the modern way to grow a book of business, right? I should be out there growing a community. I should be out there on social, putting content out into the world, and I will develop a following. And through that following, I will have the ability to, generate a business. And you can see that happening, but you kind of almost have the frustration of it, like the market's not ready for it in terms of like from a regulatory perspective specifically. And I think similarly with TradeApp, right? StockTwits has been there. And I remember talking to Howard about this. It might even be like 5 years ago, right? That when somebody's, talking about something, and posting it, interacting on StockTwits, they should be able to click buy or sell like that easily, right? Just right in their stream. And that vision has been there for, better than 5 years. And to finally see it realized is really exciting. It's got to be incredibly rewarding for you.
Yeah, it's really awesome. I think, and we've actually realized that vision of a buy or sell button now for, we had that about 3 years ago, or maybe 4 years ago now. When Robinhood first came out, we integrated them. And the idea of TradeApp has been bouncing around StockTwits probably for like 7-8 years, or almost from the start. And we've always kind of kept our head down and said, let's build, let's keep getting the community bigger and bigger and bigger. At some point we'll be big enough that it will make sense for us to at least explore. and I think we never really, I don't want to say we never wanted to become a broker, but we did for years and years and years. It was like, we don't want to have to become a broker. We would love for our community to be able to do what you said, like trade seamlessly with each other and create a really interesting social experience around that. I think what happened was, we started to integrate other brokerages, and I think we integrated Robinhood, and we had a really great API. We had a really great seamless experience there. But when you start, and then we integrated like Fidelity and E-Trade through a company called TradeIt. And we were able to understand our users, and our community members, they wanted to do that. We had at one point, I think we had $1.5 billion worth of assets connected, which was interesting information. And I'm sure there's even more, right? And that was only on, a percentage of our member base. So we were like, and we knew we had a lot of people who had a lot of money using our platform. It was, at the level of user base, but it made it a little more real. And then, but the problem is we just couldn't build on top of a platform or on top of technology that weren't thinking of themselves as a platform, right? And as you can only do so much and for so long without on top of this technology service that like one day can change everything about how you integrate. And now your members, your customers are not happy anymore, right? You have to change functionality on them. And the other pieces, and it's related, is we need, like, being a platform ourselves, like the data is important. Basically being able to use the data to create a better experience, connect people, to share trades in an interesting manner. And we weren't able to do that at the level of connections that we had. So we decided we had to go do it ourselves. And we have, overall vision on what we want social to do for active investors. And I think, it's really important to state is, Stockfit started off in 2008, right? When we started, we wanted to create a better media platform for investors because we thought the existing platforms, failed people, right? You had, CNBC at the time was very much I was at Scapegoater, who we railed against. But, in the world at that time, is every guru, every personality, every analyst, just, everyone was the same, right? Everyone was a retail investor, and many of them looked like the worst stereotype of every retail investor. So, we started from there and we built up, right? Like, if everyone can, make the worst trades in the world and blow up the economy, then why are you telling me that you're smarter than me or anyone, really? And I think it's been lost a little bit as we've had this bull market and this bull run, and a lot of that has been forgotten. But that moment in time was real. It was really interesting, and we wanted to create a platform so that people could learn from each other, because we thought a connected group of people, and we still believe that a connected group of people is so much stronger than one person and some more of a hierarchy, right? And more of a distributed network and an intertwined network of ideas and information sharing will benefit people much more than, and hurting in general, right? Than one channel that's broadcasting to everyone and basically being the one that sets the tone of what's going on in the market.
Great.
So, and with TradeApp, we're trying to take a lot of the things we've learned over the last 10 years, which is a lot. Some of the things that we thought we could do, but we couldn't really, accomplish. And a lot of it has to do with understanding how people are trading, right? We don't know necessarily how you're doing. And that could be for the customer themselves, to help give them a better experience that helps them out. As a product person, building an investing experience, you want to, what is customers? Because success, it's, how they're doing. It's not everything, but it's, a good chunk of it. Without knowing that, for a product that people use right before they make a trade and right after they make a trade, we can't deliver a great experience, and we can't build the network that we envision in the future that we envision. So it just was the natural evolution of, our vision, our mission, our goals, and, what we need to do next.
That's great. Getting close to wrapping up here, and one of the things that I've always loved about your team there at StockTwits is how open you are from a community perspective, right? So it's not just on StockTwits.com or the app, right? You put on Stocktoberfest events. Howard has always been kind of out there on camera, on podcasts, on his own blog. You've always been out there, very approachable and interactive. And recently, you've just launched a podcast. Well, actually, I'm not sure how recently that is, but I just stumbled upon it. But what I love about the After Hours podcast there is, and I listened to a few episodes, is I love the conversational nature, right? It is a departure from many other shows, and you keyed up CNBC as an example of where there's a lot of talking to people, right? And there's a lot of chest thumping as if the person on the screen is the one and only expert that has all the knowledge, versus what I like about what you're doing with the show is you're having real conversations, right? I kind of feel like I'm sitting around the table with you while you're talking. Tell me a little bit about the show and kind of how it came about, and what your goal for it is for the audience.
Yeah, well, I'm glad that's how you approach it, because that was how we've been thinking about it. So the podcast is called After Hours by StockTwits. It's very much a podcast that we were bouncing around the idea. It's like, a podcast that's investing podcast or the stock market podcast that's, not about stocks. Right. I don't think that's really the case. Basically what we wanted to recreate was a conversation that happens with investors, whether it be at a party, at a bar, where it's just like, those conversations you have. Maybe you're not talking about maybe you're going deep on a stock and the economy, but maybe you're just talking about the products and the trends that are affecting the market. So we wanted to basically make it real. One of the big things we want to do with StockTwits as a social platform is make investing more approachable. Take that fun aspect that we see every day and distribute it, right? And make investing less scary for those that think it's scary, because it's just real. It's just, markets are just generally conversations anyway. And most people have decent ideas. I think it's, the bad ideas that happen are generally either hurting that happens in certain times or just greed. But those are not really conversations those happen at moments of time, like Bitcoin and the crypto boom. You could tell that was, everyone kind of collectively going in one direction, but in general, people might be right. They might be wrong. There's conversations of Facebook when they went public in 2010. I remember having at parties and being like, I should buy this IPO as way overvalued. And that was wrong. But there's a lot of people that, loved it, who you wouldn't consider the most informed people that probably didn't buy that IPO, right? Snap was, same thing. It's, but, probably in the other direction. Although that's gone up a bit recently. But there's these product services that people use, and we just want to recreate the conversations that they should be comfortable having, but also make it approachable for a community, so that they can, relate to it. We don't want it to be dumb or stupid or pandering in any sense, but we just want to just be real.
Yeah, I was listening to one of the recent episodes, and you guys were talking about the streaming services that are there, and you're talking about Netflix and Amazon and Roku, and so you weren't just talking about the services, you were talking about devices. And there's a couple of things that are interesting to me. Not only were you talking about the stocks and the trading and what's likely to happen there, but you were and the broader market for that space, device and service. But there's just some interesting insights in terms that many people may not be, aware of. Like, for instance, I don't remember the woman's name who was on your show with you. What her name was. Dallas. Yeah. Sorry. Thank you. I should remember that. She's in Texas. Yeah. Just the notion that she says she doesn't own a TV, right? That she does not own a TV and she's watching a lot of her stuff on a computer versus an actual television. And you guys went back and forth on the merits or demerits of smart TVs and so forth. And I thought that was one of those things that's a really interesting insight for people, right? Because markets change over time and consumer preferences change. So you're doing something a little bit differently there. So kudos to you guys. I think you're doing a fantastic job.
Thanks.
Well, cool. So to wrap things up here, obviously people can find you on StockTwits, but so what's the best way for people to reach out to you? I'm sure people are going to want to connect with you, follow you, get in touch with you, maybe even ask you some questions. What's the best way for them to reach out to you?
Yeah. So on StockTwits and Twitter, I'm Zero Beta. And that's my handle. Justin Paterno on LinkedIn. You can send me a request there. I'm generally very open on email, but my email inbox right now is just it's a work in progress. I need to clean it up, so I'm not going to throw that on podcast.
Ping me on social.
Yeah.
We'll connect, right?
Hit me on any social channel. I'm available. I have open DMs on Twitter as well, so anyone can come in, message me. As long as it's not a Nigerian scam.
There you go. Very cool. All right, brother. Well, I really appreciate you being on the show. Thank you very much. And look forward to talking to you in person sometime soon.
All right. Thanks for having me on, Mike. Take care.
All right. Thank you very much for listening to this latest episode of the Modern Financial Advisor podcast. It's always an honor to have you with us. Please do make sure you rate and subscribe the show on Apple Podcasts, SoundCloud, Spotify, Stitcher, Google Play, wherever you get your podcast jam on. Really do appreciate you tuning in and listening to us wherever you may be, whether that's your car, your lawn, your office, doing a little vacuuming around the house. Who knows where you and your earbuds are going. I'm just happy to be part of it, and hopefully you're getting some value out of the show. Before I let you go, make sure you swing by blog.truelytics.com and check out Carla McCabe's latest blog post titled Buying a Financial Advisory Firm? Consider these deal structure guidelines. It's a really interesting read, and as you know, with Carla, she goes into detail. She doesn't miss a beat. So she's got a lot of great suggestions and recommendations there for you if you're considering acquiring another firm. And frankly, if you're thinking about selling your firm, you might want to read this too, because buyers might be reading it. So make sure you check that out. Carla's a great writer, and she knows her stuff. She's a certified valuation analyst. She's kind of wicked smart and stuff. Okay. Hope you're having a great day, and we'll talk to you next time on the Modern Financial Advisor podcast. Have a good one. See ya. Bye.